Hi there, Karen Stanko with REMAX here in Edmonton, Alberta, Canada, and I'm introducing you to Marc.
Hi, Marc Crossman, Alberta Mortgage Professionals. I'm part of the Enrich Mortgage Group.
All right, so today we're going to be talking to you live about Edmonton, Alberta, Canada, and Alberta, and specifically what our forecast is in 2024. Marc is a mortgage broker, so he's going to be talking to us about the rates and what he sees in 2024 and how this is going to change the Edmonton market. So Marc, right now we're in February, it's 2024. What is your thoughts on the rates and how do you see this moving in the next 10 months?
Sure. So I think there's two things I'd like to talk about. One is the spring market. So there's going to be a natural competition among lenders for the spring market. So as they try to fill their pipelines, they're going to compete a little bit more among themselves. So that's going to be the initial phase. So we're already seeing interest rates coming down as they're trying to compete among each other. So right now we're under 5%, which is great news. A lot of clients for the last 4 or 5 months have seen rates significantly higher than 5%.
So is that for a 5-year fixed?
5-year fixed. Let's, generally speaking, as we talk about mortgage rates, let's use a 5-year fixed. That's predominantly what clients are speaking about for right now. As the interest rates change, then we're going to start having conversations about the variable and shorter terms. But generally speaking, going forward, we're talking about a 5-year fixed.
Okay. Now, everybody seems to be predicting that in June, July, we're going to be seeing a change in the rate. What's your thoughts about this?
Well, that was my prediction as well, that the Bank of Canada would start to reduce interest rates later on in the year. There was some indicating that the rates will be coming down before June and July, and I don't believe that's the case. That being said, we just got some inflation numbers, and inflation numbers came in at 2.9%, which was really good because they've been sticky for a long time. So now, with the inflation rates coming down, there's hope that indeed June, July, we'll see the interest rate or the Bank of Canada rate come down, which will be good for the fixed rates, for the variable rates. And then that will also lead into the fixed rates coming down, generally speaking.
Okay, so my question to you is, I am coached by some realtors in the US, and they were saying that the job market rates or market stats came out in the US, and the US is really banking, because they've got quite high rates right now, on their rates coming down, but because the job market was so strong that they don't think that's going to come down, and usually Canada follows suit with the US. So do you think because our inflation's going down and the rate is staying up, it shows that we've got a healthy economy and that the rates might not go as significantly as predicted?
So we have a really strong economy, and we also have a housing issue as well. So now the monetary policy, what the Bank of Canada is looking to do and what the government wants to do, sometimes may not always be aligned. So we have a strong economy, that's what was impacting inflation. But that being said, inflation's coming down, and so what we may see is that the bank may not cut rates, but they may just hold rates for longer if the economy is really still robust and inflation still continues to be sticky. So yes, the Canadian economy usually follows the American economy, but what we might see, instead of a cut in June and July, we might see that being pushed into August, September.
Okay, so if there is a small cut in August and September, do you see anything else coming down in like the third quarter or the fourth quarter?
Well, I'm hoping that, I don't think we're going to see a lot of cuts this year. I think we might see the beginning of cuts. I think in 2025 is when you might see more significant cuts. So hopefully by the end of year, October, November, interest rates are in the 4.5%, 4.6, 4.7 range, which would be great. I think that's really the ideal spot for interest rates, around 4.5%.
Okay, because interesting enough, those people that are coaching me in the US are predicting next year, 2025, as a year where a ton of foreclosures are going to come on the market, almost as significant as in 2008. Because they are doing, we call it like bridge financing, but they call them, I can't remember what it's called, short loans. Mm-hmm. And so shortfall loans. So they're called shortfall loans, and everybody's low rates are basically expiring next year. So that is going to be causing some other issues. What I'm thinking is we're going to have a lot more inventory on the real estate market next year, because a lot of people are going to go, uh-oh, I can't afford a 4.8 maybe mortgage, which I think I've been doing this for 17 years full time, and I feel like the rates are going to probably stay stagnant for quite a few years around the 4 to 4.5. I think that's where our economy tends to thrive, and so does the real estate economy. So those 2% rates and 1%, they're a blast in the past. But what we have seen and what's going on in the US is there's a ton of tax increases, and affordability has just went out the window, and as a result, people that were just holding on at the 2% mortgage, and they're going to have to sell. So that brings me into my predictions of 2024 for the real estate market. Currently, we only have 1,600 or 1,700 actually 1,743 single family homes for sale in all of the Edmonton and surrounding area. For a population over 1 million, that is not a lot. In 2008, I saw about 10,000. That's what our MLS went to. It was ridiculous, and it was definitely a buyer's market. Right now, we have a significant seller's market. 2 days ago, I was waiting in line to show a house at 7 o'clock at night with 4 other realtors, which is pretty crazy. We're only in February, so I feel the spring market has already hit. If you are thinking about selling, right now is a great time, because you can always do supply and demand. I think that the townhouses are already picking up. Single family homes are under 400,000 are already quite significantly in demand, and I feel that as the year progresses, probably in May and June, when everybody thinks that the spring market is, we'll see a little bit more coming on. Maybe we'll go up to 2,500 to 2,600 single family homes, but we've got a lot of pressure from other provinces. And I also feel that as affordability, people decide that they can't afford a townhouse, because I just sold a townhouse with a double garage for $369,000, brand new though, but still quite significant compared to when we were selling them for $275,000 in the last 2 or 3 years. I see apartment style condominiums as the way to place your money if you are looking for an investment. I think that they're going to increase in value, and we're going to see a stronger condominium market in the next 2 to 3 years, which a lot of people that are holding condominiums as investments are going to breathe a sigh of relief, as our properties have come down significantly, some in effect to $100,000 to $200,000 in the last few years. So what do you see the rates in December or November doing?
Well, I think I agree with you. That 4.5% range is going to be ideal. Now, you said earlier about the inventory. On our side, we're seeing the same thing. So we had clients being approved for 1.5%, 2%. And when we pre-approve clients for 400,000, clients, 95% of clients buy to their maximum. So, and that maximum pre-approval is like, including all their debts and everything else, what's the maximum? Most clients do not buy well below that. And so the problem is, when they were buying at their maximum at interest rates of 1 or 2%, now that interest rates are 4.5%, 5%, and we have trillions of dollars of mortgages coming due within the next year and a half, the next 2 years, all those people, all their payments, they were already at the limit. So if their payments go up $400 or $500, that's what's causing the issue or the foreclosures that we're potentially going to see. So we're going to see 2 things. One, clients are going to have to sell their homes, and it's going to increase the supply, or they're going to have to refinance their home and stay put. So we're going to have 2 spectrums, but definitely we're going to see a lot more inventory, because people can't afford the homes because they were maxed out at 2%, so they're overmaxed at 4.5%.
What an exciting few years we've had with the COVID and the changes of the market. So that leads us into our next video that you can check on, the next one, where we are going to talk about how affordable is it to actually move to Alberta, and what are the payments on a monthly basis. So I'm Karen Stanko, I'm with REMAX Real Estate, and Marc
Crossman, Alberta Mortgage Professionals with the Enriched Mortgage Group.
Yes, so if you do have any questions, please feel free to reach out to us. Our contact information is below. Also, if you do like content like this, I've got many videos and videos on tours of the Edmonton and surrounding area. And I would love for you to subscribe. And if you are thinking about moving in the Edmonton and surrounding area, I'd love to be your realtor of choice, as I've been a realtor full-time for 17 years. So thanks for joining us, and see you at the next one.